You ever stare at your grocery receipt and just wonder how it got so high? How some headline about a conflict thousands of miles away could somehow make your milk more expensive? Well, today we're going to connect those dots. We're going to trace that exact line from the biggest global economic news right down to the cash in your wallet. So let's just jump right in with a question. We all feel it when prices go up, right? A few percent here, a few percent there. But can you even imagine living somewhere where prices are expected to jump not 6%, but over 680% in a single year? Go on, take a guess. And the answer is Venezuela, a projected inflation rate of over 680%. That is, by a huge margin, the highest in the world. It's a powerful reminder that even though we talk about one big global economy, the reality for people can be worlds apart, sometimes just across a border. Okay, now let's zoom all the way out. The projected global average for inflation in 2026 is a much calmer 3.7%. And that's actually trending down from 4.2% in 2025, which kind of suggests things are cooling off. But here's the thing you always have to remember about averages. They can be really misleading. That seemingly tame 3.7% number, it's hiding a wild story of extremes. Behind that single number is a global tug of war, with some countries pulling prices way, way up and others holding them way down. And you can see that contrast right here, clear as day. On one side of the spectrum, you've got places like Venezuela, Sudan, and Iran, all grappling with crushing inflation. We're talking over 40%. And on the other end, you have economies like China, Thailand, and Switzerland, where prices are barely moving, rising less than 1%. I mean, what a difference. So, what's behind these two completely different worlds? Well, you can boil it down to a few key things. Really high inflation, it almost always follows instability and conflict. But on the flip side, countries with super low inflation, like Switzerland, tend to be very stable and have incredibly strong currencies. The Swiss franc, for example, is so strong that it's actually making things they import cheaper for them. Okay, so where does a huge economy like the United States fit into all this? Well, the forecast for 2026 is 2.4%. Now, that is trending down, which is good news, but it's still floating just above the Federal Reserve's target. It's a number that's pretty stable, sure, but it's still high enough that you can definitely feel it. And that brings us to the question that really matters, doesn't it? What does a number like 2.4% actually mean for you, for your budget? Let's take this down from the big national picture to something we all know, the grocery store. Okay, this is really fascinating. So on average, a US household spends about 8% of its income on groceries. But that is just the average. The reality is totally different depending on where you live. In a state with higher incomes like Massachusetts, it's just over 6%. But you go down to Mississippi, where incomes are lower, and that share of their paycheck jumps to almost 11%. It's a really stark reminder that inflation doesn't hit us all equally. And this really shows you the real-world squeeze. See, it's not just about the price on the sticker. It's about how much of your hard-earned paycheck that price eats up. For a family in Mississippi, that extra percentage isn't just a statistic. It is a heavy, heavy burden. So we've seen the effects. We've seen them on a global scale and right there in our own backyards. But what's the fundamental engine behind it all? What is it that actually makes prices for, well, anything, from milk to metals, go up or down? You know, it all comes down to one of these simplest but most powerful ideas in all of economics: supply and demand. It's super intuitive. When a ton of people want something and there isn't much of it to go around, the price goes up. And when there's plenty of something, but not as many people are buying it, the price goes down. That's it. And to really see this idea in action, we don't need to open a textbook. We just have to look at what's been happening with one single commodity: silver. It is the perfect real-world case study. So check out how this story unfolds. For years, the silver market was pretty stable, balanced. Then, in 2021, demand just exploded, and suddenly there wasn't enough to go around. By 2022, that supply shortage hit a record high. And the result? Well, prices are now projected to just rocket past $80 an ounce by 2025. So what created this perfect storm? While on the demand side, you had this massive surge from green tech. Think solar panels and electric cars, they all need silver. On top of that, people started buying more jewelry and silver for investment after the pandemic. And what was happening on the supply side? Nothing. It stayed flat. So, way more demand, same old supply. You know what happens next. The price has to go up. And this, right here, is the key. The exact same forces that sent the price of silver through the roof are at play every single day with everything you buy. From the gas you put in your car to the bread in your grocery cart, it's all the same story. So it really is one big chain reaction. It all starts with these huge global forces, a new technology, a conflict, a change in our habits. That creates an imbalance between supply and demand, and that drives up prices around the world. And that wave of higher prices eventually washes right up to your front door, and you feel it in your budget. Which leaves us with one last question to think about. The green energy revolution completely upended the silver market. So as our world keeps changing, as technology keeps evolving, you just have to wonder, what's going to be the next silver? What everyday thing is about to have its own big supply and demand moment?